Hello, traders. Good evening, good afternoon around the world. This is Phil V at Trading Capital Markets. Today we are the 8th of May, 2025, and we're currently 9:27 a.m., 2 minutes and a half before open. Just give me one moment. I'll go and close my window. And we're back. All right. All right, so we were stuck in this, well, we turned around at the previous week's high on Friday. We didn't make a new high. Now we're 45 seconds until open. Stuck within this last fair value gap of the bigger down move over here. And that's a daily fair value gap. Here you go. Daily fair value gap and daily order block. Let's go in and trade the open and see what the market has to offer us today. 10 seconds. All right, market open. These relative equal lows are looking suspect. So yeah, these relative equal lows over here are the focus, I guess, now. First one taken over here. Second one close by. Okay, all of them have been taken. These three right here by 1.5. Okay, so that's a close below the low, with the body close below the low. We have this tiny fair value gap over here that was left, and that's the first presented fair value gap too. So let's color that in purple and see what we how we react below these lows. Personally, I'd rather see a turning point around here. This can be the 50% mark of that full range of this 4-hour whatever. So this range over here, from this low to this high, 50% mark is right here. Maybe even take Asia's low. It's a bit low. This is Asia's low. Come take it, bounce back over here, but that's a bit low, to be honest. I think we would bounce off with the 50 over here, and if we continue going lower. Okay, so very close to the first presented fair value gap. We have not really high impact news. Low volatility for these ones is wholesale inventories and wholesale trade sales in 23 minutes, or at 1 p.m. is 30-year bond auction. So Okay, so right here, just tapped in. I don't see why it would go higher. This is a really balanced price range over here. Wicks, like same scenario. The only counter argument to this is the low it created over here before going a bit higher is the type of low that is left when breakaway gaps are formed. But over here, there's no, yeah, exactly. There's no structure for the breakaway gap to have favor. Stayed below even the consequent encroachment of this tiny first presented fair value gap. And now we're trading lower. So as I said, probably targets is around here. This is on the 5 minute. This fair value gap that hasn't been tapped into yet, off of yesterday's Asia move. Another one within, with a little volume imbalance included too. Second volume imbalance over here. Be nice to continue shorting. Right here, yeah. 8 seconds left. Respect to the top half with the bodies. The top half of this fair value gap closed below the top half. Let's see. Nice price action. 15 seconds left. Now it's bouncing off the quarter mark up here. We broke below it. Typically when this happens and we start building below it, the 50% is next. But we shall wait and see. Alright, so volume imbalance up here. We touch the first presented fair value gap again to the tick. but by this formation, we shall see. If you're doing market structure, right, technically it shouldn't pass this highest point and continue lower because we're creating new low with bodies breaking below these lows and closing below these lows. So if your stops would be here, this would be the market structure. And it's going down. Respected it. Hit the first percentage fair value gap. Closed inside the volume imbalance. Over here, let's zoom in. You see that? This one reopened at the consequent encroachment and came back up. So another tricky open. Let's see, did Trump say anything on Truth Social? Victory Day, 43 minutes ago. Jerome Powell, 3 hours ago. And the golden age of America is coming. And 4 hours ago, a very big and exciting day ahead for the United States of America and the United Kingdom press conference at 10 a.m. 15 minutes. I'll go on. I don't know how the rules work. I don't know if I'm allowed to put the sound of a stream. Nope, sorry everyone. Let's close this. Wow, that's nice to see. Market structure respected, high respected, didn't take it out, continuing lower. Beautiful. One, two, third drive down is starting now. Let's see how far we could go. Asia is far away. Asia is like 150, 180 points away. Asia low. Let's do the market structure. I know this one we could drag it lower once we find the swing point like this. It's over here. If anybody's in the chat, leave a little comment, or in the live stream, leave a little comment in the chat. See over here? That was the target. 50% coming up of that range. So before we were talking about the total range of the distribution. So let's go on the 4 hours like this. If we zoom in, let me take out the orders, it's annoying. Trading, executions off, perfect. So this range over here from this low to this high. 50% mark is over here. We might even have a stall before, so we'll see. Go back to the minute. So we might see a little continuation. With this, sorry, fair value gap open. Yeah, we're probably gonna see a right back up into here and down move right after that. But I'm going to be more interested in seeing a reversal at these places. Market structure shift at this spot over here, or close to this spot, because this is like one drive, two drives down, third drive down, and it's pretty long way from like the prices of this morning around 8 and 7. So this is a swing point. Oops, wrong move. Take this, bring this down over here. Yep. 10 seconds. 10 o'clock's in a couple minutes. Let me go check the White House. White House, White House, the White House for some live streams. Respected that CB, that bearish fair value gap. Usually these types of lows, when it comes back over here, relative equal lows, they might be taken. Might. But I'm leaning more to yes than no for being taken. Stopped at the consequent encroachment. Let's see. Hey, what's up? What's up, Roger? Yeah, exactly. Yeah, it fell down right away. It's crazy. That's why sometimes you get this feeling, after trading so long in the markets, you know when it's exhausted, and literally the moment we exited is the moment it started falling. So we did great. No greed. It's important. Hmm. Right now I'm staying a little bit more conservative, because it's like three drives down, one, two, and three from the open. So I'd like to see how it reacts to this fair value gap that it created. This is the market structure over here. I like how it respected this one, you see? Didn't go above, didn't close above, and used it, went down. So the third drive usually is where a move gets exhausted, but as I was saying, I don't know if you watched the pre-market analysis. I was saying that we're currently caught in, let me show you, in this range, in this 4-hour range from this low to this high, with like fake outs below. Didn't get above this, and this is the 50% mark. The 50% mark is close to this 15-minute, 5-minute fair value gap over here, which would be in a balanced price range with these wicks. So right here, and there's two back to back stacked. So you could get on the first one, which it did, and it bounced. You see over here, it stopped at the consequent encroachment of the first one. But I would like to see a deeper retracement into this one, because we created two relative equal lows over here. If I remove this, you'll see. So I'll put this line over here, like that we know where we're at, sell side. And I would like to see a drive back into here, close to the 50% retracement of that whole range. So I might see like a drive maybe back up to this and come back down. But you see, as I said, that's why I didn't use this fair value gap over here, because usually after one, two, three pushes down, it starts to gain its footing. So now we're still within this leg of price action since we didn't make a new high. If it starts shifting above this, above these two relative equal highs, but there are many lows beyond, many lows beyond. Like over here, you're talking about these lows? Yeah, no worries. But I understand what you mean. There's a lot of lows beyond, like over here. Beyond means below also, beyond its current price. So you actually said it well. So yeah, you're talking about these lows over here, right? Oh, okay, on the current move, right here. Oh, yes, 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 that is true. But, and we also, like, look how price is beautiful. I'm telling you. Price is, I missed this actually. I missed this fair value gap, but price is beautiful. Look, didn't pass these highs from the candle that initiated that fair value gap. Didn't pass it. And then another drop down. So you see this creates like the setup also to come and take these relative equal lows as sell side. If it comes back up here, I might use it. I think I'm gonna use it. So you see this? Let's see over here. So this over here is gonna be an inversion because this would have been used as support coming in, but coming back up into it would be used as oops, trade, sell, market. The only problem is it didn't pass this low, so I'm not gonna go in. Let me show you why. So this low started creating higher highs, but then take a new low. Yeah, me neither. I don't like it. That's why we remain patient. All right, we got a higher high now. You see? Let me take this off. Just came back down on the sell side we just broke. Let's see. Does the White House have any live streams right now? Uh, media. No, no live streams yet. So for executions, yeah, I look on 1 minute candles, but I do look at the overall time frames, like the bigger picture on the 15 minute. So when I came back to show you these 15 minute fair value gaps, I do look at them as a point of reference to where it might turn. So then I look down on the 1 minute to see if market structure actually is starting to shift within one of these premium or discount arrays. Yeah. So you see here, it dipped into this discount array, and then it started changing market structure within this leg. So within this leg that we're still in a technically a downtrend within the 1 minute time frame because we're still within this price leg. We didn't create a new low, but within the retracement of that price leg, we started changing market structure. So this is a tricky one. What I would do is if it breaks below here, I wait for a continuation to this one, and if it breaks above here, then we're bullish. These relative equal lows, highs, sorry. If we break above there, then this would shift the market structure of this leg, and then we'd start moving our way back up to here. There's a lot of conditionals in trading. Like you have to put like strict parameters in order to be successful, because if you don't have strict parameters, you don't know how to gauge what you did wrong, right? So that's really important for trading. So now you see within this leg, it's starting to turn around. Price action over here, here, and here. So break below this, break and close with a body below this would mean that we'd come and attack um, these lows, because this is the leg that made the new high. So we use these lows. Apparently Trump is talking at 10 a.m. with Great Britain. I'm from Canada, Montreal, Canada. Where are you from? You see, market structure. Let's see if we shift. Okay, this obsolete. Now we have this fair value gap. If we close below, will be used as an inversion. This obsolete, this obsolete, this is a fair value gap. These both are fair value gaps for now. Oh, you're from Spain. Awesome. I went to Spain. Really nice place. Boom. Now we're going to use this as an inversion fair value gap. You see? Because we just broke these lows. Let's see if we close with a body below. Inversion. There you go. Yeah, it's a beautiful place. Beautiful place. I went to Seville. I really liked it. Okay, you see how these relative equal lows were very swept. Cerveza y tapas. Yeah, yeah, the best. Living the life. Okay, so we just swept these relative equal lows over here, and market structure broke below. You see this? We broke below this little leg. So if I kept the, we're gonna make our way to the second one. Mm -mm 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 -mm. So if this was a fake sweep, like just actually a real sweep, this is the type of price action. Okay, this is not a sweep. We're actually going to start making our way a little bit lower now, I think. Typically, we could use this fair value gap as an entry short, but I think I would wait until I put one at this inversion right here. But yeah, you see, this was a good entry because we broke the low, and that's the first. That's the fair value gap below these lows. Okay, so we broke these lows. I'm gonna wait a little bit more for my order. Yeah, me too. I thought it was it's a safe idea, but what happened was is we left relative equal lows over here, two of them, and we created a fair value gap below these lows and left it open. So we didn't only close, we created a fair value gap below these lows that changed market structure. So that's why we saw this strong move down, right? But as I was saying, me in the beginning of my plan, I was more looking for a buy around this level over here. to start changing market structure at the second fair value gap on the 15-minute mark. This one over here, and this is the 50% retracement of the full range. And you see it's quite a nasty drop. So we are bound to see some price action shifts over here. That too is another possible scenario to go short right here in this fair value gap, but I'm still going to wait for a market structure shift in these scenarios. With which futures company are you trading with for the prop firms, if you don't mind me asking? Top Step, okay. Let's see. Patience, patience, patience. The name of the game. Yeah. Have you ever been to Seville? Seville? Near Barcelona. Okay, cool. Let's pull up a little map. Google Earth. Google Earth. Let's see. Yeah, it's beautiful, Seville. Sevilla. Really nice. So let's see if we pass through this fair value gap over here. Hmm. Spain, 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 Spain. Barcelona. Ah, I see. It's nice. Oh yeah, there's a lot of taxes for entrepreneurs. That sucks. That sucks. Oh man. Over here there's a lot of taxes too, but I guess it's more the mentality also. Down there you're more chill. Over here we work, work, work. Yes, of course. I know FC Barcelona. Uh, my favorite time FC Barcelona was with Xavi Hernandez, Puyol. There was Victor Valdez in the goals. Who else? Messi. It was a great time. Best soccer I've ever seen in my life. Best, yeah, yeah, best Barcelona team ever. Yeah, you guys lost against Inter, no? Inter Milan. Yeah. I should start watching some more soccer. I like it too. It's just that when you used to play soccer for so long, sometimes watching soccer is frustrating. I used to play for about 12 years of my life, so you get sometimes you get really mad. So we were about to go professional, but then our team started get like semi-pro, semi-professional, but our team members started to getting paid to go to other teams, so it kind of broke up our whole team. But yeah, we were pretty good. All right, so you see, now we're building above this fair value gap over here. Roger, let's see what we do above this candle, this last bullish candle that created this bear move. Bodies are closing below this, the consequent encroachment of this kind of miniature order block. Yeah, well, either a fall or if it doesn't start falling over here, which it went pretty close to check. It went pretty close to the 50% retracement of that whole range, which is right here. If it's not a fall from here, it's going to be a reversal of this high, and then coming to attack these two highs, maybe getting back up here. Like we might even make it all the way back here. Like check this out. You see these relative equal highs over here? One, two as buy side. We might even make it back up to here. So it's interesting. It's an interesting day if we remain patient and watch. And you see right here where it got stopped is the big. Wow, look at that. Yeah, yeah, yeah. So right here where it got stopped is the beginning of that 1 day fair value gap. So it's a daily fair value gap. It's like a, well, here we can't see it there, but I'll show you. Exactly to the tick, it stopped on the daily fair value gap, and I will show you right now, right here. In the 5 minute, I think you can be able to see it in the 5 minute. It's too far. Oh well. You get the point. So yeah, either a fall into here or a change of structure bypassing these highs. Bodies stayed within this first 15-minute fair value gap. You see this? Bodies closed right at the top, came back down. Now this could be used as an inversion for support over here. And bodies stopped at the consequent encroachment of this SIBI. Maybe use it as support and go higher. But let's see. We did break this order block, miniature order block, so we're not going to use it anymore. Like that, we keep the chart as clean as possible. Probably going to see a nice little push up, a nice move up from here. But we remain as neutral as possible in our ideas to be able to not marry one and move with the market. But I've seen these many times, so it kind of gives me a little edge. There it is. Okay, closing at the high of the top half of this 15-minute fair value gap. Let's see what we could do. So this is what we're aiming for now, this high. I'll mark it out as a buy side. Like that, we could have a visual on it. Buy side. That's what we're gonna wanna. This is an old buy side. I'll take it off. This market structure, we don't need it anymore. But I'm just, yeah. How much time have you been using ICT's logic? I I'm assuming you know who ICT is. Michael J. Huddleston. How do you know if it's a break of structure or a liquidity sweep? Okay, so how do I know if it's a break of structure or liquidity sweep? So over here, if it would have been a liquidity sweep, right? Let me explain it. Okay, great. You know ICT. So if it would have been a liquidity sweep, this candle, you see, takes these lows. Let me zoom in, like that you could really understand. So this candle would take these lows and close above like it did, and this candle would continue higher, right? But if it wasn't a liquidity sweep, then we'd have a break below and close below like this, you see? So this one too. You see this sweeped? It wasn't a sweep because this broke below and closed below. So it's a continuation of the market structure. So wicks do the damage, bodies tell the story. Yeah, exactly, by the close of the candles. I know it by the close of the candles. So yeah, you have to wait for confirmation. You can't go just so you can't go just in, right? Yeah, exactly, in every time frame. I use it in every time frame, the same rule. And sometimes I even check the 15-minute time frame when I think it's a fake sweep, a real sweep on the 1 minute. I check on the 15-minute and the 5 minute to see if the wicks just did the damage and the bodies closed below. You see, this is interesting now, what it's doing. Fair value gap over here. Yeah, no problem, man. If you have any other questions, just ask away. I'm here to help at the same time of trading, so. And if you have any other trader friends, tell them to come and see my stream. It'd be nice. All right, so take this. Let's do the path again. My friends don't like this world. Yeah, it's tough. It's tough. It's tough, but you have to stay consistent and stay disciplined and be patient. But it's worth it. Yeah, new people, new friends. So I see it's using this one as an inversion still over here. This fair value gap. Now let's see if we could come and dip back into this one and create a new high. Because we're, how many points? We're 131 points open. Let's see, what's the open? So it's right here. We might make it lower. We'll see. But the first presented fair value gap is still over here. So it could be a nice first target if we start breaking structure. But for now, it's having a hard time passing this inversion with the bodies. There you go. Yeah, starting to look good. You see the strength coming in right now. 1032. It's about that time. Now, if we create new, like if we create relative equal highs, we could use this bullish fair value gap, which would be combined with this one if this stays open. So now this is good. So we could take this off. We pass this inversion. I was using it as a little bit of resistance, and then we decide to break straight through. The last fair value gap to the upside of this move. And now we have this leg. This leg that has now just been created. This fair value gap over here, right here. Boom. Come a little bit closer. Just a little bit more. I'm thinking of putting my order right here. Yeah, exactly. Right there. Let's see. Consequent encroachment. Close right above. The only fair value gap that hasn't been taken is this one. And I think these highs are close enough to come and bounce off of this point over here. So you know what? First order is going to be right here. First order of business. So that's first order of business is going to be here. Order in. This order in with a stop loss right here. Below this low. Let's see. From this low to this high. Optimal trade entry. I would go. Oh ho ho. And if we come back to 70%, I'll add another lot. So after this wick, if we come back down here, I'll think of adding another lot. But overall, this was a nice little dip into this inversion, pop off, and possibly a second buy over here if it comes back down with the same stop loss. Now let's see. I'm taking two positions because it's a little bit small, like the range. So it's like what 40. There you go. Second position in. So it's a bit small, the range. The second logic. So typically when it does a long candle like this, and the price closes within the previous candle, okay, uh, the third candle likes to take the low of this one. So it takes the low of this one and then shoots straight up. And the only reason I did it also is because my risk allows me to. So in terms of percentage of risk, I can allow myself this amount of actually I could allow myself two other positions in terms of risk because it's not enough. So I'm allowed to lose like about 25,000 a day on this account. And this is only 10,000 loss for this position. So yeah, it's also like the amount of risk that I'm willing to take. But now we might get stopped out. Let's see. So it's really important that you manage your risk properly. And back up. And a little bit more. How about that? A nice candle close, huh? The only thing that I don't like about this position right now is these relative equal lows. Yeah, I do not like these relative equal lows that it left. In Forex, I was around 0.5% to 1% risk. Ah, okay, yeah, I see. That's good. We might just continue lower. Not right when I said it. And if I take this loss, I don't think I'm going to trade for the rest of the day. let's see. So yeah, too many relative equal lows right here. I'm not very positive on my, yeah, let's just move this a little bit lower since I could risk it. So sometimes it likes to tap the bodies. So like, look, this is an order block, okay? Let me take off the market structure and I'll tell you why I just adjusted my stop loss there. It's like you think about it, you ruminate a little bit, and then you could adjust. So over here, this is an order block before this move up, right? Order block. Sometimes price just likes to tap the body of the order block, which is right here, and go. So that's why I put it right below the body of the order block, the stop loss. And we got stopped out. Look at that. Unbelievable. That is funny. Look at that. That is hilarious. Yeah, sometimes it gets you like that. Okay. So the next 15 minute fair value gap is right here, and it has the 50% retracement of that full range right here. Now we gotta stay patient. I used full risk for today. No, I didn't use full risk. I used half of my risk available. So on a usually on let me see. Let me calculate it quick. So okay, so full risk is 37,500. I only used 12,000, so I used one third of my risk, and that's 0.25% of 15 million. So you see, this is why I didn't re-enter on this candle. So typically what I lose, right? I like to wait for a break of these after to be extra sure, or a continuation over here, a little bit lower. But I won't hop in directly right after. You'll never see me do that. So now we're continuing a bit lower. Just gonna send a little text. Okay, so now order block was the last area of support. Personally, I would be surprised if this holds up. Because we create relative equal lows. Over here, relative equal highs. Yeah, I'd be really surprised if this holds up. Well, okay, now we have this one right here. This is an inversion. And this is a fair value gap right here within it. So we have double. Inversion and a fair value gap. Oops, not this one. This one. Let's go. Let's take this big one out. Gonna make it clearer for us to see. Holy, holy moly. 2 seconds I stopped looking. This is crazy. Okay, so just hit the 50%. The 50% and that fair value gap. Okay, so that's gonna be my cue. Let's see. 2 seconds. So why sometimes fair value gaps is on the low and sometimes on the close. On the low, sometimes on the low and sometimes on the close. Oh, yes. Okay, so over here. Let me explain to you because I did it right here. And this is where you ask the question, right? So over here, if you could see, there's a gap between this one and this one. You see, there's a gap between this one and this one. They didn't close exactly at the same spot. So when fair value gaps are going up and they do a little gap in volume, you have to include that gap in volume unless the wick passed the 50% mark, this line. If the wick passed the 50% mark over here, you have to put the fair value gap over here where the wick finishes. And that's only if there's a volume imbalance within this fair value gap. Yeah, I see it directly. I could see it right away. It's, yeah, my eyes are used to it. Big session. Big drop, huh? Right here. Wow, there you go. So that was the 50%. And this is where we're going to start building, probably. Let's see. Over here, volume imbalance. So you see, let me show you this fair value gap. Like that you understand. So this fair value gap from here to here, right? With the volume imbalance, the wick passed the 50%, okay? So we don't include the volume imbalance in the fair value gap. We only take the wick. Yeah, this is where we're going to start ripping over here. We tapped the 50 and now we're going to start flying. Watch this. Watch this. We're going to start flying. So now we hit that little fair value gap. There's these two relative equal lows still here chilling, but I doubt it's going to go there. This is probably the sweep that you were talking about. So on the 15 minute, look, when you go on the 15 minute, you leave the wick, you see? If the body closes above the wick, that means it's a sweep. So that's why I like to go on both time frames. See, body's closing above the wick in 1 minute and 20 seconds. If it gets above the wick, then it's a sweep. But you could see this over here. Also in the 5 minute too. Let's see on the one. Okay, 1 minute left. Thirty-seven seconds left. Back to the 50. Back up. I'm probably going to trade. I'm going to buy it right here at market 200. I'm going to put my stops right below this. I could put, yeah, that's perfect stops. So now I'm going to be not even full risk. But that's a personal move. I think it's going to start rebalancing. I don't think it's going to come and take these relative equal lows of Asia. I think we have achieved the turning point right here. And now we're going to start making our way back up. I would think so. Targets are going to be right here. Right above these highs right here. A little bit lower, a little bit higher. Let's see. What RR do you search? Okay, so for me, RR usually is like a 1.4, 1.4 because of my win rate. Here, I have a video that I would like to share with you. It's a really important video to understand win rates and probabilities. Hmm. I'm gonna buy another. Let's see. Okay, perfect. It's gonna be 37,000. So I just bought some more lots. Um, video. I'll send you the link. Mm, 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 mm. Let me 1 second. Accounts. Let's go in the folder. Trading folder. Right here. All right. Share. Copy link. I'll put in the chat. Here's the link of the video that's really important. So this is it's called the math of winning in trading. Depending on your precision and your hit rate, it tells you what type of RR you need and all of the logic behind the probabilities. Awesome. It's going to be good for you. There we go. Now it's starting to move. Oh, thank you, Roger. You too. Have a great day. I think it's gonna finish very well this trade, because I've been waiting for this spot for a long time, and it's like the rebalancing of the whole range. You see already we're at 0.12%, so and I have double the lots, so it's already the loss of my previous trade. But yeah, I hope you have a great day, and thank you for tuning in again, Roger. I know we had a little loss, but it's fine. It's part of the game, and it was a small loss because of the distance in points. Have a great day. Bye bye. Yeah, trade's going. The trade is going. 0.20% in profit already on double the lots. Right when it reaches this high, I'm going to take half off. Wow, it's pushing. It's pushing. Yeah, we took back those lows. We went to a balanced price range, and now we're continuing higher off of. And we're building. We're building in that fair value gap over here. So let's see. Are we going to use this as an inversion? Maybe. Let's go. Keep on pushing. There's that push that we were talking about early in the session. Yes, this is a long session, but it's one where we use patience and also high high time frame. Well, higher time frame than the 1 minute uh, discount array to get in. So above these highs, I'm going to take half off. So yeah, I'm going to take half off above these highs. And I might even start pyramiding it in. There we go. We're breaking out above. Let's see. Half off is coming up soon. Right here, we're going to take half off. Very close, very close. Oh, almost. Let's see. Very close to taking half off. So close. Let's see. Last push right here. I think it got us out. Because I see a wick right here. Oh, it didn't get us out. This one is going to be the candle that's going to take us out. Okay, half out. Perfect. Half out and the rest is gravy. So what happened is we took our initial risk out that we got on our previous loss, and now we're gonna ride this to these highs. And I'm gonna put my stop loss at break even on this one, just above break even to cover the commissions. So today is a no loss day, but so yeah, no loss day, and we're gonna let the market ride it out for the rest of the day. Possibly close above here, and tomorrow take these relative equal highs up top. But I think I'm going to start active trailing maybe. Let's see. Come on. Let's go. A little bit higher. This is a target right here. And if it comes back down all the way, then it's fine. But we will not have lost anything today. So I'll keep you guys posted on the result of this trade. I hope you guys enjoyed, and have a great day, everyone. Bye bye. This is Phil V at Trading Capital Markets.